Hey there, fellow finance enthusiasts. Today, I want to discuss, is inflation already down to the Fed's target of 2%? Wharton's Jeremy. Embark on an electrifying journey that will tickle your funny bone, ignite your curiosity, and challenge your financial perspective. Who'd better guide us through this thrilling adventure than the brilliant Jeremy from Wharton's School of Business? But before we delve into the intricacies of interest rates and economic jargon, let's take a quick detour and explore the fascinating world of earnings season. With news buzzing from all corners, from unexpected developments to eye-popping reports from major players such as the legendary Bank of Pam-erica. Yes, you heard that right, and the highly anticipated Netflix and Tesla. It's time to crunch those numbers and see if reality aligns with our expectations. Grab your calculator and brace yourself for an exhilarating ride through the world of finance. Trust me, it's going to be worth every penny, or should I say, every percentage point.
Ah, boy, here we go.
You see, our economy finds itself in a state of blissful equilibrium, with inflation gracefully poised in its ideal range. It's a cause for jubilation, akin to stumbling upon a chest of treasure in the vast economic landscape. As we bask in the glory of this achievement, let's raise our glasses and celebrate the harmonious dance between stability and success. But amidst this festive atmosphere, it's essential to remain vigilant and seek wisdom from a knowledgeable person. His insights will shed light on the potential repercussions of the banking crisis-induced lending slowdown on earnings across various sectors of the economy. Let's now hear from Jeremy on his insights regarding how the slowdown in lending caused by the banking crisis could potentially impact earnings in various sectors of the economy.
Well, they're pretty good, to say the least, but we have to remember first quarter is virtually all pre-SVB, which occurred around the middle of March. So, we're not getting in these earnings what effect the slowdown in lending really might impact.
Jeremy unveils a fascinating puzzle, highlighting that the first quarter's earnings are just the tip of the iceberg, dominated by the SVB phenomenon. But here's the twist. We're yet to witness the full impact of the lending slowdown on those earnings. It's like a hidden treasure waiting to be discovered. Even the data confirms it. Imagine a tale of March housing starts, set in motion before the banking crisis. The small guys might face a bumpy road, not just in housing, but in retail and beyond. However, the big players, with their lines of credit and capital, could ride this wave and emerge victorious. It's like a classic tale of David and Goliath, where the crisis unexpectedly boosts earnings for the mighty giants, particularly the large banks we've all witnessed, and the ripple effect extends throughout the entire economy, painting a picture of resilience and potential prosperity. So brace yourselves for an enthralling journey as we navigate the twists and turns of this captivating financial landscape.
Dude.
As we delve deeper into Jeremy's mesmerizing speech, we find ourselves caught in a web of intrigue and possibility. The banking crisis, like a sudden storm, has left its mark on the landscape of earnings. The impact of the lending slowdown, akin to a gust of wind, has the potential to reshape various sectors of the economy. Is the situation even more dire than we realize? The whispers from the ground reveal a stark reality. Lending to small businesses from regional banks has experienced a significant slowdown. The impact is palpable, though it may not yet be reflected in the official data. As a result, a sense of caution lingers in the air, echoing the sentiments of Austin Goolsbee. Will the decision-makers take heed and pause, or will they proceed without pause unless confronted with further deteriorating data?
Well, I think the effect of the banking crisis, I mean, what I hear on the ground is that the lending to the small guy from regional banks has slowed dramatically, and the impact is there. It's just not in the data yet. And as a result, it's my feeling, I share Austin Goolsbee.
The banking crisis is like watching a sloth in action. but without the endearing charm. The repercussions have reached far and wide, and it seems like the regional banks are moving at a pace that even a snail would scoff at. The effect? Well, let me tell you, it's hitting the small guy like a gentle breeze in a marathon. Picture this. You're a small business owner, ready to take on the world with your innovative ideas and entrepreneurial spirit. You march into a regional bank, full of hope, only to be greeted with a lethargy that could rival a tortoise on a sleepy Sunday afternoon. The lending process, which once had a semblance of efficiency, has now become a labyrinthine journey of paperwork and endless waiting.
Yes, very funny, very.
You see, these regional banks used to be the heroes of the small business world, providing the lifeblood of capital to fuel dreams. But alas, in the wake of the banking crisis, they seem to have lost their gusto. The flow of funds has slowed to a crawl, like a sloth trying to break the land speed record. The impact of this sluggishness is already evident on the ground, even if the data hasn't caught up yet. Small businesses are feeling the pinch, and it's not a gentle pinch, like a caring grandmother's fingers. It's more like a vice grip from a grumpy troll. The wheels of progress are grinding to a halt, and the small guy is left twiddling his thumbs, waiting for a loan approval that seems to be perpetually stuck in limbo. The sentiments of Austin Goolsbee, who famously said, "It's time to pause," and by pause, it's time for the regional banks to shake off their sluggishness, put on their running shoes, and get back in the race. So let's hope that these banks find their inner cheetah, leaving behind the sloth-like tendencies and embracing a speed and agility that would make Usain Bolt proud, because at the end of the day, it's small businesses that drive the economy forward, and they deserve a lending process that's as swift as a gazelle on caffeine.
I think there's a couple things that he's saying. First of all, I think he really underestimates the slowdown in housing. We've talked about the distortion in the data, in the housing data. When data in housing prices is still going down. Next week, we'll get Case-Shiller, which might show the 8th consecutive decline in housing prices, even though the BLS continues to show higher prices. So in fact, I've done a calculation using current prices and core year over year using current housing prices, both on rentals and on owner-occupied homes, is down to 2% year over year. But it's over 5% in the official statistics. So I think inflation basically is back down to the Fed target.
Jay Powell, the master interpreter of economic data. It seems he might have missed a few crucial details in his analysis. While he talks about the distortion in housing data, the reality is that prices continue their downward descent, painting a not-so-rosy picture. Brace yourselves, because next week's Case-Shiller report could very well unveil the 8th consecutive decline in housing prices. But here's the kicker. While the Bureau of Labor Statistics, BLS, parades higher prices, my trusty calculations reveal a different tale. Using current prices and core year-over-year data, we find ourselves at a modest 2% inflation rate, miles away from the inflated 5% in those official statistics. So, it appears that inflation has taken a detour and caused it up comfortably within the Fed's target. And there you have it. We've embarked on an exhilarating journey into the world of inflation, guided by the invaluable insights of Wharton's Jeremy. But wait, our quest doesn't end here. The question lingers in the air. Has inflation truly found its way down to the Federal Reserve's coveted 2% target? Are we basking in the tranquility of economic stability? Or are there storm clouds brewing on the horizon? So, my fellow enthusiasts, armed with Jeremy's astute observations and our shared determination, let us sail forth with confidence and curiosity. Let us chart our course amidst the tempestuous waves of economic fluctuations, undeterred by the whims of inflation. Together, we shall weather the storms, seize the opportunities, and steer our financial ships towards the shores of prosperity. As our expedition draws to a temporary close, remember this mantra: stay curious, stay informed, and stay financially fabulous. Until we rendezvous again for our next enthralling voyage through the realms of economic insights, May your financial endeavors be filled with triumph, and your purses brimming with abundance. Bon voyage, my dear companions, and may the winds of fortune forever be at your back. What do you think about this topic? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe to this channel. I'll see you in the next video.